The global oil market is facing a dilemma. On one hand, the International Energy Agency warns of surprise oil output cuts by OPEC Plus producer group risks exacerbating a projected supply deficit and could scupper an economic recovery. On the other hand, rising oil stocks likely contributed to the need of the cuts, with OECD industry stocks in January hitting their highest level since July 2021. This increased oil supply, coupled with a dwindling demand, has resulted in low oil prices and squeezed consumer budgets. As a precautionary move, OPEC Plus has announced a 1.16 million barrels per day cut until the end of the year, in addition to Russia's existing plans to trim 500,000 barrels per day of its production from March until at least the end of the year. These cuts will have a significant impact on the global oil market, with world oil supply now expected to decrease by 400,000 barrels per day by the end of the year. As demand is expected to rise, this shift will lead to renewed inventory draws and upward pressure on prices. In this video, we want to look at how this decision will affect the oil market and what impact it may have on consumers. The cuts are set to take place in May and will result in higher prices for consumers for basic necessities. This could be detrimental to the economic recovery and growth. We will discuss the implications of this move and how oil-producing nations have been trying to achieve an optimal balance between supply and demand. We'll also take a look at how other oil-producing countries are affected by the shifting oil market and how they are making efforts to reduce supply while increasing demand. Moreover, we'll explore the different strategies employed by OPEC Plus countries and the potential consequences of their moves on the economy. The unprecedented decision made by the OPEC Plus nations is likely to affect the global oil market in the foreseeable future, and this video will provide an in-depth analysis of the current situation and its potential outcomes. We'll look at the possible repercussions of the additional cuts to the global oil market and how they will impact consumers while also taking into consideration other relevant factors.